Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Sam Hudson of Corn Belt Marketing, and we did see lower grains, mostly higher in the livestock futures today. All right, Sam, we had a nice Friday, higher weekly closes in the grains last week. Why could we not build on it here today? Was this just profit taking?
Well, it seemed like last week was all just trying about, gain our bearings again. Where do we need to be? Soybeans have done a nice job in getting back to those pre-report levels. I don't think we changed enough on the balance sheet to really change people's opinions of that market, but it caught a lot of sympathy selling with the report that we had in corn. So the fact that we were able to base a little bit in corn last week, I think was positive, but I think that's just a reflection of the fact that producers are kind of shell-shocked, didn't really have the energy or fodder to continue selling. And it's happened at a time where temperatures are just brutally cold, so you're slowing down deliveries anyways. I do think we still all know that cash pulls and cash needs here ahead of March are still going to be strong, and I would think that any sort of life into that 430 to 435 level in the March corn is going to continue to draw some hedge pressure.
You were talking about weather slowing down marketings. It's also slowed down soy processing as well as ethanol production, right?
Absolutely. The move we saw in natural gas last week was an eye-opener, big gap higher last Tuesday, and we've continued to see that strength. In fact, it was trading 30% higher here to start the week again. And we'll see if that's just a blow off top. But when you see situations like that, the cost to continue to keep plants running almost just isn't even worth it, especially when it's a very short-term in nature situation. We should get back to some normal temperatures here. Our ethanol grind's been very strong. I see no reason that you're going to derail that, but our weekly total could be a little bit disappointing this week because of that.
And you don't feel like the outside market nervousness tied to the Canadian tariffs really spilled over?
I don't think so. I think we know enough about where we sit. I don't think enough can change there to really change, our landscape or provide a jolt to the market. I would say you got to keep an eye on the currency values, the way the dollar's been plummeting, and people are, kind of piling, into metals now to treasuries. I think that's a short-term, aberration here, kind of a herd mentality, and I think that can actually help us if it continues that way, as we start to compete with those South American supplies ahead of spring.
So the bulls in the corn market are going to argue with you a little bit on the corn and say, hey, exports were some of the highest we've seen since March of 2021. Yep. If we keep this pace going, aren't we going to start chewing through those supplies?
Yeah, and honestly, I would be one of the same arguers on that point. I think it's been kind of interesting to see how the USDA has more or less chased demand for the last 2 years. I mean, when you see that we're 5 to 8% ahead of very large numbers and they still don't bump that, I think it's problematic. And I think that's what some of the frustration, spills over, when you look at last summer at the NAC and the ability to forecast ideal trends on the production side, but we can't forecast that same idealness or ideality in demand. And so now we're seeing that. And I think the risk moving forward here, Michelle, is that if there's ever a reason to flip that, not only will you have to strip out some of the supply, but you have to get caught up on where our demand actually sits, whether you believe it or not.
For sure. The next thing that we're going to be talking about in the corn market is really, are we going to see less acres in the USDA Ag Outlook Forum, right?
Yeah, and that's coming up here this next month. That kind of set the bar last year. We started around that 94 to 95 million acre number, and I wouldn't, expect we'd assume anything different this year. If anything, just a little bit stronger yet. I think we see a very strong desire, especially in the Northwest Corn Belt, where they had really strong yields, to probably plant corn again. I think these areas that have been disease-riddled, parts of Northwest Iowa, Northeast Nebraska, I think they may pull back on that for some, but really profitability across all 3 of these principal row crops are, a challenge at this point if you can't write in those very large yields and at least prices staying here.
So let's talk about that. Lower corn acres, but maybe higher soybean acres. But how much can the market absorb?
Well, that's the thing. I don't know if it matters either way. We're talking about the difference of 95, 96, 98 million acres, somewhere in there. None of this matters unless you pull back on the supply side. And so, we can talk about whatever we're going to plant. I don't know if any of those numbers matter, Michelle, until we actually get into the growing season. The bigger the number is, the bigger it can fall. But trying to convince anyone that we've got problems with the production side at this point has become very difficult. And inherently, I think that becomes the risk. If we have an actual problem, do we not realize it until it's too late?
The other thing the corn and soybean market might be watching tomorrow, President Trump is supposed to be in Iowa. You would think maybe he might make some announcement on biofuels.
You would think if they're coming to Iowa. I think you and I talked about it ahead of going on here. I think that's something to really keep an eye on. There were some rumors today that the 45Z legislation is more or less done, and maybe we can see some announcements announcements with that, and that's on the heels of some disappointment for not getting E15. But you kind of push all that to the side and realize, we're asking for more demand in an effort to get better prices. Our demand's record large, and so we need to make sure we fight the right battles. I don't know that this can be a real landscape changer either.
Soybean market cannot stay above the 200-day moving average or whatever average you're watching at this point. But the last week's push felt a little bit like we were getting a little South American weather premium. Has that situation changed at all?
Not really. I mean, we mentioned Argentina. They're certainly seeing those the drop in condition ratings. If it's just them, that really could affect our meal market more than anything. They crush 2/3 to 70% of their soybeans down there. So if there's any displacement, it could affect meal more than anything. I think what we're all looking at, though, is the fact that you still have a Brazilian crop that's forecast between 170 and 180 million metric tons. Don't want to get wound around the axle about the details after that, but as long as it stays within that range, it's going to be really difficult to throw a shot of risk premium into the market. And for soybean demand, we've seen China fulfill these commitments by February. That's good, but now we need to get working on shipping it all. And if we can continue to do that at a fast pace, maybe that opens the door where we can actually raise demand later on, but it can't happen fast enough right now.
China will be effectively out of our market, though, for a while with Brazil's lower crop prices and crop coming to the market, right?
Yeah, I think you'd have to expect that. You touched on the dollar, though, and keep in mind, just because China was absent to start off the year, we saw a lot of other world buyers step up in that absence. Wouldn't be surprised to see that start to happen again. It takes a lot longer to kind of add up those totals, but if it's happening, it's still a good sign nonetheless.
Tim, what's your sense about after the 12 million metric tons from China, when we start working on 25 million metric tons? Do they start that August, September like they normally do, or what's the buying pattern?
Well, I think for now, I wouldn't expect to see a bunch more. If you're going to see that, I think you're going to see it on the front end if it's going to continue. I think the most you can deduce at this point is the fact that they have reached our commitments now. I think that offers confidence that we should see forecasts from USDA continue to hold that demand in there for next year for those same commitments. And that'll help us at least stabilize the balance sheet. Now, that can always change up or down. I don't think you should expect much variation there for new crop purposes until we get into March, April, May and see, how that South American crop finishes and how it all, goes back into the global equation, because everyone's crushing more and keeping more of these products as well for the same biofuel programs.
So you don't necessarily buy into the idea they're going to start buying for that 25 million metric ton commitment anytime soon?
Not right away. I think they're going to want to make sure they figure out how the news story on this part of it ends first before they really get to those commitments. But I think the USDA will be confident enough to see what they've done already to keep that demand kind of expected in there, and I think the market will too. And that could actually lead to more confidence in planting beans in some areas if they feel like they've got to get away from corn.
So the winter wheat market, obviously try to put in a little weather premium, but we kind of got stopped out at resistance there too.
Yeah, absolutely. And same thing, stocks to usage is actually the weakest there from a fundamental standpoint at over 40%. I don't think these prices really encourage us to think that we continue to see acres put into wheat. If anything, they could continue to come out of them and go towards corn and soybeans as long as the metrics continue to suggest that. And with variable storage rates, I think we should expect that to continue. We're kind of the bottom of the barrel in terms of wheat supply. If anyone needs to come after it, it's probably we're probably seeing higher prices all the way around.
Cattle market was up today, and how much of that was just the push from cash, higher cash?
I think that's most of it. Honestly, I think you would have traded there anyways had we not had the cattle on feed report last week. I think there were some jitters, that kind of paused that buying. Now, we've seen some confidence. The front end here should probably stay intact, especially with the prices you're seeing at the sale barn. And if there's any, real angst in the market that comes up, whether it's from a headline or, economic conditions, I think it's, beyond June at this point if we start to see that.
Sam, can you get live cattle out of this sideways trading range that we're in? Can we get a chart breakout that'll ultimately go back up to the old highs?
I think it's possible. If you look at, we talked about that, kind of the front end here and what it can do. If you look at the April contract, I think if you continue to trade and can close above 240, I think the next target becomes that 250 mark. And we start looking at some of those tops and gaps that we left on the chart back in October. And I think that's true with both live and feeder cattle. Not sure which one's going to want to lead the way at this point, but I think both of them have got that on their mind.
And do the hogs keep going here? I mean, we're closing in the back months on 110. And if we get above that, do we keep going?
Gosh, I kind of thought we'd slow down 106 to 107 there in the June, honestly. The strong cash nature, I think, of live cattle have helped continue to facilitate this market. Some concern about disease pressure as well. I still think as a producer, you've got to be, a little bit prudent here when you've seen that big of a run. I mean, the June contract has run from 95 all the way up to 110 almost here, just since the beginning of December. So I think that, both, some caution at a minimum, because we know we can produce it and refill the coffers there a lot faster compared to this beef market.
Gotcha. Thanks so much. Sam Hudson with Corn Belt Marketing. That is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.